Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend and good Labor Day, all. Ira Epstein of Linden Associates with your metals update, and this is for the weekend of Friday, the 1st of September, 2017. And remember, the way I do my weekend updates is different than what I do daily. I'm going to show you the longer-term charts, and that's where we'll keep this at this point. And then I back that up during the week with daily charts instead of that, Monday through Thursday. And for those of you that subscribe to my research, well, what you get in the morning, I cover 40 charts with day trade, position trade ideas, get in, get out here, and really give you a lot. But I'm going to ask a favor of everybody out there that watches this. If you like these videos, and I see many of you that just keep coming back over and over, and I must say I'm very proud that our viewership not only grows and spikes, it keeps growing right on up there. Tell your friends about us. That's what makes this work for me. Otherwise, don't need to do it. I'll just do it for my subscribers, and you won't get these particular videos for free on YouTube. It's that simple. So as you do that, that's our partnership with you. You know we offer a lot of free things to you, and we'll try to continue doing that as the season goes. And I've got a lot of new things that I'll bring on as the fall season gets going. You know, it's like the baseball season to me. It's the end of it, World Series coming up. I call that the September time because trading begins. Maybe football when you kick off and you get going now right into the whole season. And the trading season gets quite active between September and it stalls a little bit at Thanksgiving, picks up again right into the first of the year, then you die a little bit, and then it goes right on through until you get towards the spring months again. So it gets to be quite interesting now. At least the summer's over and people's attention turned back to these markets. Now, without question, today was an important day. We got the U.S. non-farms payroll. The numbers came out soft. You normally get soft numbers in August, so that's not a surprise. Where I think the numbers really keep missing are on the wage inflation. It came out at 0.011%. In other words, a tenth and a fraction. That is not good. The market was looking for double that at least. That does not mean it takes the Fed on or off track. Let's first understand, this was an August reading. We still have to get September, October, November readings in our databases for the Fed to make a decision in December what they're going to do. The odds of the Fed moving in September, well, they can do whatever they want, but why would they at this point in time? Then you had another event. You go through these reports, and you were right if you were saying, the number's going to stink and the dollar goes down, which it did. It cratered to 92.05, and you got up to 119.89.5. For those of you that do get my research, and I'm talking my written reports where I'm saying buy here, sell there, and I write 2 in-depth reports every day. I warned in them. I said, you know, when you got up to 120.62 this week in the euro, I said, that's probably going to get the ire of the European Central Bank, and you don't know how they're going to respond, but it can't be favorable with them having a September meeting coming up. Guess what? You get today the numbers coming out, 7:30, literally a minute or two afterwards. We get an announcement the European Central Bank may not consider cutting back their bond buying program in September. You then went and you cratered. You went from 119.89. You were down so fast, a lot of points, you didn't know what was going on. Either solution didn't hurt the metal markets because on one solution, you got the weak dollar supporting the market, and then you get world growth. You can't stop what's going on in the EU. The economies are looking good, and as bad as we don't have wage inflation, we have an economy that's still doing well and stock markets that are still up very sharply, not showing signs of breaking. So when we come to a gold monthly chart, you know I wrote a gold long-term report in June. So far, that report is still very much on the money. Momentum pointing up. I thought the market would fight a battle at the 18-month moving average of closes, and I looked for the first resistance to be right here, the 100-month moving average of closes in green, and that's exactly what you've got. The high this week, 1330.80. That number for the 100-month is 1329.60. The next resistance, if it can clear it, and that's an if, is the 1370.180 level. Momentum is up, as you can see in this market, because prices have closed over the 18-month moving average of closes. The bias is up. The pattern isn't bullish, though. The chart pattern, in an uptrend, you normally have higher highs, higher lows. In this chart, you have a higher high and then a lower low. But the momentum is still to the upside, and you might be targeting that area. If you come to the weekly area chart of closes, you can see that this low was under the previous lows, and then the market rocketed up to, in fact, where it's at right now, 1326.10. We're going to call the weekly charts in an uptrend. When you come to a weekly bar chart, you've got a pattern where the market dropped down and then rocketed up. So where are the break lows and highs on this chart? I know them because I created an indicator to help you see them very easily. It's called a swing line. And what it does is it measures in a certain way and draws a line each week to either a high or low of that week. It's all based on 5 rules that I set up, and they're in my charting course. If you go to our website, you'll see how I describe a lot of this about that, and just go to our website, www.iraepstein.com. The pattern here is bullish, unlike the monthly chart, which is not bearish. It just doesn't have this pattern. It's got higher lows, higher highs, bullish. The market's moving up and over the 18-week average of closes, bullish. The market has got Bollinger Band that it got up to 2 weeks ago, backed off, and today back up and over it at this point in time. Bullish. Yes, the market is over the upper Bollinger Band, and 5% of the time is all that it stays there. But it can stay over that for a couple of weeks before it has to back off. So this is still a good sign. I'm not saying it won't back off, but I'm saying until you take out 1280, who has control of this market? The bulls do. The market's got a swing line that's up. Admittedly, it's now at the point where this, would I ever recommend buying over a Bollinger Band or selling under one? If you take my course, you know the answer to that's going to be no. But the momentum is certainly pointing higher here. What about slow stochastics? This is real momentum. Still pointing higher. Bias up, you're over the 18-week average. Trend up. But you've got to be careful because you are here fighting with that Bollinger Band, and that's going to be the thing you look at. And you can see where you're at. You're at 1325.90, and the Bollinger Band's 1315. So that's all that I can tell you what the market's doing. In the silver market, you're in an uptrend. Now, you came recently to the lower Bollinger Bands. You held them and bounced each time. Now you're at the other end of the spectrum. You're at the upper Bollinger Band. Do you think the market's going to be able to burst through that or just hit it and back away? I'll leave you to decide that. My subscribers will know what I say. The resistance, 1783.40, momentum up, bias up, trend up. You still have the 18-week average underneath the 100. You might get a bullish crossover when those two cross each other. In the copper market, you have a market that's either side continuing the upper Bollinger Band, momentum locked into a bull trend. Everything's bullish still on this chart. Admittedly, it's not giving the market a shot to get in. It's just hugging that top line, which makes trading it very difficult. In the platinum market, the trend is up. First off, the bias is up. You can see that. I use slow stochastics on weekly charts different than I use them on daily charts, by the way. Normally, I'd say this is an overbought market, but it's not so on a weekly chart. It's just pointing to upward momentum. I have a difference, and I talk about that in my course. In any case, you got higher lows, higher highs. You've gone to the upper Bollinger Band, and I'm going to warn you, each time you've gone there in the past, you have broken back from it. So if the markets break here, it's not a surprise. Doesn't mean the trend has to end. You might be getting ready for a pause in the markets, but you certainly are in uptrends in all of the metals. Here you've got higher lows, higher highs. So the weekly charts in the metals as a group are all bullish. They're all challenging their upper Bollinger Bands. That is the danger. In the dollar index, you have a market that has kept lower highs, lower lows. Now, the market is trying to put in a reversal right now on the weekly chart where it's trying to close higher, where that could happen, but it's not a key reversal. It didn't take out the previous week's high. Momentum is still locked into the downside. This is a bounce, and it's not that strong of a bounce so far. So when you put it all together and you look at it, what a week. We had Hurricane Harvey. We saw gasoline prices soar to prices we haven't seen in years. A squeeze play happen in the September gasoline. Crude finding something of a home in the 46.5 area. Metal market strong across the board. Stock market strong. And a brand new wording out of the European Union. Well, sometimes you get opportunities to go in and out in trades. There is a formula, a technique called pivot point trading. And if you'd like to learn that, if you're an in-and-out trader, or let's assume you're looking at a chart and you're saying, you know, why is that market stalling here or stalling in another area? Well, what pivot points do is they find the center line and give you two sell numbers above it, two buys under it. The formula, pretty common throughout the whole industry, widely used, I'd say, by a lot of traders, not every trader, obviously, but it's a very, very popular trading tool. I've created two videos to teach it to you. One I do with animation on a PowerPoint. So you learn the formula, and then I start showing you how the points on each part of the formula get plotted on a chart. The second part, I take you to a real chart and show you how to use it. And in September, I'm creating a third one. And that third chart is going to show you how you tie momentum into this formula. So if you're interested, let's get you with the first two of them. Give us a call, 866-973-2077, and yes, it's free. Give us a call. You can go to our website, by the way, and you'll see a carousel of free offers. You'll see this is one of them. You can click on it or other offers. The forms will come up. You can take it from there. Same thing right here. Just be certain that you click. If you're watching me on YouTube, you're going to see an icon, or underneath us on many websites, it says, click here for Ira's free offers. Do so. The forms will appear. Take it from there. I'm Ira Epstein. Have a great Labor Day holiday. Remember, different types of trading hours over holidays. You contact your broker for them. I'm not going to stick my neck out and say what your broker should be telling you. And I will be back with you on Tuesday. Take care now.